Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again to the channel. For those of you who are new, this is where we talk about all things market profile. If you haven't seen some of the previous videos, then go back and have a look. Just go back to the channel. I think we've put a tremendous amount of work into going through a lot of the stuff you see here in depth. Why are you looking at a channel that trades in market profile? If you don't know what it is, then I would simply say Google. We do have a lot of stuff on here relating to market profile, but again, we feel that, you know, as a trader, if you're looking at a trading idea, methodology, you know, any kind of strategy, you want to be able to research some of it yourself. It is no good at me sitting here and telling you essentially all about the good stuff about market profile, and maybe you've been a trader that's been trading for 2 days. So again, just go back, have a look at what we've got, and, you know, try and build some foundation so it resonates. For those of you who are not new to the channel, then welcome. It's just another video. So in this episode, I should say, I'm going to be going over my portfolio again. I've spoken a lot over the past couple of weeks about portfolio management, and that's because I understand that a lot of traders have come into the business looking at massive P&Ls, lots of over leveraging, and haven't really thought about, you know, how other traders are able to achieve this. And it usually, as I always say, it's great risk. Like, people are risking unreasonably because there is the potential of a big payoff, but also you got to realize that those people don't mind losing everything, right? Sometimes it's because of age, right? They're of a demographic where they don't mind. If you're in your 40s, your 30s, or your 50s, you probably don't want to lose everything at that stage, so you're naturally going to be more conservative. If you're a lot younger, you're going to be riskier, but think about what you could achieve as a younger person if you were just a little bit more stable-headed, patient, and willing to put in the time and the work to do proper risk management so that you can go on to build an account that not only you're going to be proud of, but you're just going to go on to do quite well. And some of the things that maybe grown-ups much older than you have seen or gone through, you won't have to go through as a trader, and you can literally ignore all the rhetoric out there and just focus on your trading because you're actually achieving something from it. So I think that's a lot of what we try and achieve here in this channel, is to be able to show the reality of trading. You don't have to trade big to make money, and even if you're doing some size, it has to be calculated. You kind of have to know what to do, how to do it, so that you can keep an relatively flat portfolio whilst you train and you build your skill set in terms of confidence. I think it's really difficult when you're going for those one-shot trades and you're not very skilled and you start losing. You lose one trade after the other and then it cascades, right? So ultimately, the way the die falls, it's kind of random. So you can lose 4 trades in a row, or you can, if you're trading tighter time frames, that's very easy to do, or you can win 4 trades in a row. So there is no particular order by which you're going to take your drawdown. And I think this is often a point that everyone kind of glosses over, is that what happens when you're having those back-to-back losses because the market volatility has changed, or the general trading environment in your asset class has changed, right? And you probably didn't see that shift, and now you're losing back-to-back coming from a winning position. It's how people go up, you know, several grands, and they're down several grands, and it is the reality of the market. So in this video, we're going to talk a lot about the portfolio side of things, but also how do you do this if, say, you wanted to be an intraday trader? What's the approach, and we do take intraday positions. I do take intraday positions, and I do that, trade around core positions a lot of the time, and I take a very professional approach to trading. So again, if you want to be able to understand how professionals look at the market, how they put that approach to trading, whether they're intraday or they swing, like I've shown you how to swing and ultimately manage a portfolio around that swing, I'm going to be able to go through some of the details with you and show you exactly how that works. All right, so starting off with my Aussie dollar, as always, as you can see, we're now trading up in value. If you ask me, at this point, we had a responsive buyer Y period last week. This is a weekly profile. It allows us to see everything within one viewfinder. So I've got 4 hourly rotations, weekly profile. I can literally trade very close to the market, so I can get those really tight risk parameters whilst I look for a lot bigger moves, right? So again, I can see that we got a value trade here, a gap in value, so we're going to get some significant upside in the next couple of weeks for sure with a lot of these assets. But initially we got this big waterfall drop, so we're looking at least for a trade back into the what we call the minus development, where liquidity tends to be a little bit low, but we know that there's been a lot of movement there because the big money intervened at this point. But as you can see, we've been going down for a long time. We've traded under a weekly low, which would be a lot of liquidity down there. So as you can see, the market's paused, grabbed some liquidity, and it's likely to move higher. So again, just tying in some of those liquidity concepts, I'd want to be long the Aussie for at least a value trade. Again, we got to bear in mind we've got an off stack here, so we're not probably going to go in 1 week up here. That's just way beyond our volatility parameter. So we've got to then take a look at how many weeks would it take for us to fill this gap here. Are we willing to be in this position for longer than a week, or do we want this to be a short-term swing trade over the next, say, 3 to 5 days? So again, in my opinion, I think we could get some decent upside on the Aussie, so I will pay attention for that. I mean, we've been dipping for a while. It is definitely, I had a bullish structural framework for the Aussie, but I'm actually changing that opinion now. I'm more leaning towards that this is looking a lot more like a bearish framework now, and it's possible that we're going to trade highs and keep moving a little bit lower. But once again, looking at where we're positioned over the weeks, we can clearly see where the liquidity bracket is, so I won't be surprised to see us work back to the top. Crude oil, I had a crude oil position here. I've actually cut this position. There is a lot more upside to go. I've taken some profits off, largely because I want to position my portfolio now going into the next couple of weeks. I'll be doing a lot of intraday trading stuff. I think the volatility is coming back. I'll also be looking to trade around a lot of core positions, so I want to free up some capital so I can actually do that. So taking some profits off the table is never a bad thing. We've been moving up with this crude oil position. It's been a little bit slow. I mean, we've been in this for a few weeks, so it's now to try and take some money off the table. It just makes sense. We can get alpha elsewhere. So out of crude oil now, a lot of my position is buried now. So again, P&L up on the screen. I'm buried in the S&P as it stands, right? So obviously I'm incredibly bullish on the S&P, as you can see. I mean, we're trading now, breaking some key levels that we had prior week. Again, I had a bullish framework with the S&P. I did say that we're looking at maybe 300, 400, in my opinion anyway, before we do a turnaround. So again, I wouldn't be surprised to see a little big run on this in the week. As an option premium seller, I've been looking at the option premiums. I think, though, in my opinion, they are a little bit cheap. I would like to see a bit more expensive premiums before I go in to start selling for the week. But again, it's giving me a hint that we might not get a full week of upside. We might be a bit volatile, do some tests, maybe even rotate backwards. We got a gap in value here as well, which is likely to get filled. I mean, it might take a week or two for that to happen. We did see that this week with this gap. We didn't fill until 4 weeks from when the gap formed, right? And then we had a proper fill at 5 weeks. So I think this was just a tester, and then we moved up from there. So that efficiency, we need to see that in the market. And obviously when you look at market profile, it can tell you where the inefficiencies are, and they will always get taken care of. We don't settle with gaps in value. If we get a gap in value, it might go down for a little bit, but ultimately we're coming back there. So it becomes a very key reference when you're trading in the direction of the gap ultimately. Gold, once again, we got rejected in this value. We spoke about that last week, that to be honest, that is what we needed to see, is a hold into this value, and then we're looking to trade it out. As you can see, we got rejected. We're back into prior week's value. So definitely bullish on gold. I think that we're going to get some upside move. We've been dropping now for 4 weeks. It makes sense that we're going to see, to some degree, some kind of rotation to the upside. So again, I'll watch the offer stack, but it's the same story with a lot of the commodities, is that we are potentially going to be looking at upside movement. Cable, we done the value trade already. So again, if you'd seen this one in the morning, we traded out slightly, but we did talk about cable last week. We traded back in the bids, and again, from a positioning standpoint, I mean, a few weeks ago we had to cut out of this. We were expecting a big bull run. We got that for a little bit, had to trade out of this just to protect that position. But again, we have a massive gap in value. So again, the upside is very real for a lot of these assets. Again, that trade down this final week where we retested the value low going back quite a few weeks, it made sense to be in a long position, and where we closed as well meant that we were going to open relatively value low, right? Which, for guys who understand the concepts of fair value, and that when an asset opens at value low, it is cheap relative to its prior week's volatility. So we want to pay attention to that. So again, any breaks to the upside, it becomes a nice little value trade. Dollar yen, we're breaking gap in value. Totally bearish on this one now. Again, I'm structurally bullish on the dollar yen for the long term, but for now, I would say we need to trade a little bit lower. We got a bid stack here, so you just want to see how the market reacts. We got a gap in value to the downside, so I would expect the dollar gets a really big drop in the coming weeks. I mean, again, like I said, those inefficiencies, they have to get dealt with, and there's a huge one down here, and I'd pay attention to that. Dollar CAD, similar story, value trade. As you can see, we're setting up for that. So again, it could be quite a short one. I wouldn't want to trade below the bid stack. We had a lot of churning. We did talk about the offers up here. As you can see, we hit them, traded close to value high, and then started to pull back out again. I do believe that we're probably going to have a slight retest. Again, structurally, it looks like dollar is getting bullish against the Canadian. I was structurally bearish on this one a couple of weeks ago, and it does look like we're getting that change in sentiment. Traded back off that bid stack, and it seems like the market is holding really well down at that 133.29 level. Bitcoin, I'm structurally bullish on Bitcoin. Have said this, I didn't get long on this one because I was cautious about the fact that Bitcoin tends to get bigger drops. Haven't seen that at the moment, so it looks like we're entering in that bullish framework, so we'll pay close attention. I just don't like the way Bitcoin's set up. We had a nice little bid build up though. I think this, we had Z period print, J period print, so again, it just depends on how you lean with this one. But for me, definitely there was a value trade here, and there was a build against that bid stack. So, there was a case here for a long, but I really don't like the fact that we got a lot of offers up here. And, Bitcoin, you like to get it when it's lower. It's an incredibly volatile asset. It could break easily. So you want to pick it when it's low. I don't like to chase into Bitcoin. So I've been really iffy on this one. Pretty nervous about Bitcoin, I think. But it's structurally bullish. I think we're at the start of the cycle. It only gets better from here. Sterling yen, structurally bullish on this one. Got a gap in value, so pay attention for any pullbacks because they'll come hard and swift. Really difficult to make those kind of trades, to be honest. But again, if you see it, that's one you want to be in. And then, of course, we have the Kiwi, which is incredibly weak. When we get these big waterfall moves, you're looking to trade no more than the minus development. So even if we did get an upside, I wouldn't look for us to breach that. I think we're in a bearish framework with the Kiwi, and it's the exact same scenario we're seeing on the Aussie. It was one of the reasons why I say that I've changed my perspective on the Aussie, and if I'm looking to get involved in this, I'll probably look a little bit more on the short side, but I would need to see more upside movement. So at the moment, my portfolio is really light. I'm only in the S&P. It shows that the risk, the non-correlation in the market, the risk in the market is definitely there in certain other asset classes. So for me, the focus is we're going to change that breath. We're going to go into intraday moves and see how best we can take advantage of the short-term volatility without a great degree of exposure. So that kind of brings me to where we are on the intraday spectrum, and we'll talk a lot more about this in the next coming weeks because I'm going to devote a little bit more attention to talking to you guys about intraday. So when we think about the intraday and we think about how we want to work it, a couple of things that we want to bear in mind. First and foremost is, no one talks about this, but you want an asset that moves. You want an asset that's volatile enough to get involved in. In my case, there's absolutely very few asset classes that beat gold in the S&P 500 for volatility. I mean, arguably, you got the NASDAQ and the Dow Jones, obviously, but again, if you think about from a focus standpoint, I like the way the S&P moves, I like the way the gold moves at specific times. Now again, something I always say to traders is that when you're new to the business, you think that the market is a 24-hour market. It's absolutely a very deceptive perspective. Yes, it is a 24-hour market, but markets revolve around liquidity. So you want to be trading your market at a time when there is high liquidity. What do I mean by that? So, generally speaking, markets will offer up the best opportunities in major center opens. Simple as that. There is no other way you can dice it. If the center opens overlap, like say for example you're trading in Chicago, you're going to start overlapping with New York to some degree, and generally the American centers are opening, there's a hell of a lot of volatility because everybody's hitting the market at different times that they consider to be those opening times. There, however, are major opening sessions. That's the Chicago Open. It's a major one for the future. So again, for me, that's roughly about 3 p.m, sort of 4 p.m. UK time. You start to get that jostle. Not only are you going to get that flow from the equity markets where everyone looks for the golden hour pullback. So you're looking at, say, 4 p.m. movement, golden hour, boom, right? It's everything's reversing or everything's going the other way. So again, for me, that's 4 p.m. UK time, right? So this hour is it's murred with volatility, right? So you got the New York Open, so 1 p.m. some asset classes are going to start showing some big moves, especially the commodities, and then you roll into sort of 2:30 p.m. when the Nasdaq Open and all those Nasdaq stocks kick off and all those day traders start to trade the open. You start to get a lot of currency flow, dollar flow, and that plays out into some of the commodities. And then we start thinking about the European Open, right? Sorry, the European Open, right? So we've looked at the New York Open, US Nasdaq Open, then the Chicago Open. So it's a lot of volatility in the US, and then we think about the European Open, right? The big hour, London trading session open, right? So huge moves, right? That depending on what you're looking at. What I said, it could be 7 a.m. in the morning UK time, it could be 8 a.m. in the morning UK time. So you're going to get these big moves starting to develop out of those sessions, so you get the most volatility. Now again, when you're trading assets like gold, you could start to see that as early as 3 a.m. in the morning, right? There's a lot of things that go on in Asia around gold, right? So Asia's becoming a major center for gold. So again, if I click on that, for example, you can see that that's based on the 2-hour shift, that's about 4 a.m. in the morning, right? So 4 a.m. UK time, you're getting moves like this on gold, right? Now you're looking at a profile here that I've condensed, right? So I've created a 1-hour profile, 5-minute rotations, right? So it allows me to be in the intraday, but into the deep intraday, right? So I can be looking at the minute-to-minute rotations, but I'm also taking into consideration the big intraday picture, which for me is the hourly time frame, right? So if I can see 1-hour rotations, I mean, I can clearly see quite here. So this is like 1 a.m. in the morning. We had this real struggle build up. So we can see there's a lot of churning here. And then we get these offer stacks building on the way up. Bit of a struggle. We're trading reasonable value high. You can actually identify those offer stacks and we're trading into a value high level. And then we fell. And it starts to break at 4 a.m. Now, think of it this way. If you're this trader that's out here, we're pushing lower. It's 4 a.m. You start to build a picture, right? We get a bit of a range, a bit of an offer stack, and then we start to break the print in B period, right? Very late short, but pretty decent move on the hour. Very late short because this indicates that we're seeing some short covering, and then what we get here is that final sort of liquidity hunt, and then we close up to the upside. Here we get a full engulfment of value, so we do a value trade here and we lock in. Immediately what I'm looking for is a pullback to the bids. Let's see if we can get close enough to value low, which gives me a very advantageous trade. What does that look like? Well, this is a 5-minute rotation, so the moment we start trading 1934, stops could be here, stops could be under value low, and then you're looking for a big move to the upside, right? So that's one way to look at it. Again, as we come into a more liquid session, there are a couple of other ways you could attack it. Here we have the 8 a.m. open, so we get this huge liquidity. Slight gap in value here. We know the inefficiency will sooner or later get taken care of, but again, we're looking at a 1 hour profile. So again, we just need a quick move on this, in and out, and it's a done deal, right? So again, just to show you how I traded this move today and yesterday's, as an intraday move, and again, P&L on the screen, so you can actually see that. So in the first one, you can see, I traded Yesterday, pretty decent move, in and out, quick, no more no more than a 1-lot position, 100-ounce position. You don't really need more than that on intraday, to be honest. You don't want to overexpose yourself. Sorry, you don't want to overexpose yourself. You pretty much just want to be in a position where you've done well, you've made money on the day. Really simple as that. No complications, right? Again, if you look at how I traded that yesterday, similar picture, to be honest. So again, if we just go back, see, so there we go, get the 8 a.m. window. You know, a lot of volatility and jostling. We get a responsive seller here. We start to cut back into value. We close and settle. Responsive buyer and K. Quickly, you can see the market testing that responsive buyer. Liquidity hunt, they're gone. They're not there anymore. If this was a solid K period print, it will compete efficiently with the J period print. So someone lodged here pretty big, and then now we start to base. What happens? G period, break. Immediately. You want to be on a short position. Again, quick move to the down. It's a 6-point move, right? Again, we settle, and then you don't want to know what happens afterwards. It makes not a shred of difference to you. You want to be in and out as fast as possible. So again, it's about taking advantage of that early liquidity, what you can see, and then moving on that, right? No time to waste. As you can see for the rest of the day, yesterday across the day, this market is a bit sideways. You know, you could be scalping this, fair enough, you know, but you're looking at moves that are happening over a 3-hour span, 4-hour span. You end up trading every day, all day. Basically, you end up sitting in front of the screen trading all day. I mean, you don't necessarily want that. You need to be in and out so you can go enjoy your day. You know, it doesn't get better if you start to trade every day. If you start to take more than, as you can see from my P&L, I mean, one position is good enough. You can see that I took some profits the day before on some core positions that I wanted to readjust. So again, those are not associated with my intraday, but still they counted to my intraday P&L. However, the core positions of my intraday, you can clearly see, I mean, if you treat this like a business, it's like a job, right? I mean, think about the people who are, like, you spend like maybe an hour or two trading, and let's say you make $200 on a trade. That is $100 an hour. Now, even with losing trades, let's say you had a bad trade, and let's say you're even on a 1-to-1 risk reward ratio, it doesn't matter. Let's say you had a bad trade, you might end up with $50 an hour in for a week's worth of work, right? If you total it up, even if you take, like, you lost half of everything you made, right? You still made $50 an hour. Now, how many people do you know in today's modern day society that work every goddamn day, 8 hours a day, that makes $50 an hour? Of course, you know, they exist. There are people who make a lot of money. $50 an hour, how many people can make that? So if you can make $50 an hour, right, you start to think about it that, well, yeah, you're not going to make that over 8 hours a day. That's inefficient, but you're making $50 an hour. So you're making as much as someone who's working, you know, every goddamn hour that's sent, you know, and you're working 2 hours a day. So everything becomes a scale up from there. The more you make, the more you can scale up, and then essentially you make more an hour. So if you treat it like a business, ultimately, worst case scenario, treat it like a job, then you start to realize that it's not about getting greedy. It's about doing it right? Doing it right so it becomes sustainable in the long term. And that's why you don't see the best traders or the guys who are making it sustainable long term. You know, you'll never see people like me floating here Lambos. It's just not going to happen. Is because at the end of the day, you can get to that scale, but you need to deploy a lot of capital to do that, and not many people in the world are going to be able to do that, right? So it's going to require a lot of sacrifice to be able to build that kind of next egg where it just becomes, you know, 100 grand a day, 200 grand a day, right? Completely different ball game. You know, and it's important that traders get that. Anyway, enough of the preach stuff. I just wanted to kind of reflect how we look at an intraday position. Once again, don't forget to like and subscribe. Let's grow the channel. For me, trading is all about reality and not about the make-believe. Again, if that's something you're looking for, then there are a ton of channels on YouTube that will pretty much give you that sort of make-believe idea of what you can get from trading. But here, you're only going to get the real deal. Traders who work with me, they know that they get the real deal. And what I tend to do is show them how to do it so it's manageable for them based on the lives they got, and it becomes a sustainable thing. If they want to become a full-time trader off the back of their progress, then it's their choice to do that. Now, there are lots of ways today that can help you become a full-time trader, but on the same token, you know, some people are just not there mentally, so you can't make them get there. showing them Lambos is not a healthy way to get people into something that they might want to do long term. It fosters greed, and it fosters and they're going to make silly mistakes. They're going to do crazy things that are going to ice them out of the game. It's going to give them a negative view of what they're doing in the long run, and then they won't succeed by default, right? So hope you enjoyed the video. Smash the like button. Till my next video, guys. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?